Madam, is my screen is sharing?
Yeah, sure.
Yeah, okay. Thank you, madam. So shall I start?
Yes, of course.
Okay, fine. Thank you. Thank you, madam. So good morning to all. So before going to start my session, I just give a small introduction about myself. Myself, Aravinth, working as an HOD MBA integrated in St. Joseph's College of Engineering, Chennai, Tamil Nadu, India. So totally, I have 11 years of teaching experience and 2 years of industry experience. I have attended more than 50 faculty development programs, attended more than 20 national and international conferences, and published around 11 journals in national and international conferences. So, this is a small introduction about myself. So, first of all, I thank the management, organizers of STEKOM University for giving this wonderful opportunity to me. So, thank you all. So, today the topic that we are going to discuss is recent trends in investment banking. So, it is a very emerging topic. So, the topic that today we are going to discuss is recent trends in investment banking. So, first we'll see the introduction about the investment banking. Investment banking is a type of banking focused on helping large organizations like corporations, government raise capital and manage complex financial transactions rather than traditional banking services like accepting deposits and offering loans. It acts as an intermediary between investors and companies seeking the fund. So this is a just introduction about the investment banking. This investment banking are globally booming from last 2 decades. That is from after the year 2000, this investment banking concepts are emerging. See, our traditional banking systems is accepting the deposit from public and lending the money to the public. Okay, so this is our traditional banking system. So our traditional banking system consists of two things. One is accepting the deposits from public and lending the money to the public. But this investment banking or act as an intermediary between investors and organizations. So this investment banking or act as an intermediary between the investors and the organizations. That is this investment banking or bridge between the fund seekers and the investors. So this is a small introduction about this investment banking. So in our next slide, we are going to See the history of investment banking. See why the term investment bank gained a popularity in the late 19th and early 20th century, and largely in relation to the United States. Investment banking services existed long before Wall Street. Most of the oldest investment banks started out as merchants trading in commodities such as spices, silk, metals, and so on. The father of investment banking, awarded to one single person, he is called as Mr. J.P. Morgan, is often considered the most influential figure in shaping modern investment banking. He was a dominant force in the industry during late 19th and early 20th century, wielding significant power and shaping the banking landscape. So this is the history of the investment banking. Madam, is my
My
voice is
voice is
audible?
audible? Yes, sure.
Can you able to visible my slide? My slide is visible?
Yes, everything is perfect.
Thank you, madam. So in our next slide, we are going to discuss about the general operations of bank. See, our general operations of bank consist of two things. One is accepting the deposits from public, and second one is lending the money to the borrowers. So for first thing is accepting the deposits from public, and second thing is lending the money to the borrowers. First we see what is mean by accepting the deposits from public. Usually, banks are accepting the deposit from public. For that deposit, banks are pay the interest to the customers. So this is a basic and foremost important operation of the bank, that is accepting the deposit from the public. Okay, wow. So banks are accepting the deposit from public. For the deposits, banks are pay the interest to the customers quarterly, offerly. And there are four types of deposits are there. That four types are saving deposits, current deposits, fixed deposits, and recurring deposits. Current deposits, saving deposits, fixed deposits, and recurring deposits. See, current deposits. First, we see what is mean by current deposits. Any individual person can open a saving deposits. Okay, wow. So any individual person can open this saving deposits. For the saving deposits, bank will pay the interest to the account holder. For this saving deposits, banks will pay the interest to the account holder. That is in saving deposits. In saving deposits, bank will provide a number of services like offering the loan, checkbook facilities, ATM card facilities. So this type of facilities provided by the bank in saving deposits. And second type is current deposits. So current deposits means, I hope that you are aware about this current deposit. Only a business people can open this current account. The saving account will open by any individual, but this current account is not similar like a saving deposit. Only a business people can open this current account. Bank will not pay any interest to the current account holder. So clearly understand that bank will not pay any interest to the current account holder. So instead of that, bank will provide overdraft facility to the current account holder. So overdraft facility means you know very well that here the account holder can withdraw more than its credit limit. So for that facility, bank is providing for the current account holder. And third one is fixed account, that is fixed account or fixed deposits. So fixed deposit means depositing a money for a fixed period. Depositing a money for a fixed period. After the maturity period, after the maturity period, only a depositor can take his money. For this fixed deposit, bank will pay the interest. So before the maturity period or before the fixed period, here account holder can't able to withdraw his money. So after the maturity period or after the fixed period only, the account holder can withdraw his money from his fixed account or fixed deposit account. That is in third point, fixed deposit. And fourth one is RD. So RD stands for recurring deposits. So recurring deposit means every month a uniform amount will be paid by the depositor for stipulated period. Every month a uniform amount to be paid by the depositor for the stipulated period. After the stipulated period, a depositor will take his money along with the interest. So here, money from rupees 500 to maximum 50,000, a depositor can deposit in his RD account, recurring deposit account. So once again, I repeat this RD, recurring deposit. Every month, a uniform amount to be paid by the depositor for the stipulated period. After the stipulated period, the depositor will take his money along with the interest. So these four are the different types of deposits offering in the bank: saving deposits, current deposits, fixed deposits, and RD recurring deposits. And second operation of bank is lending the money to the borrowers. Lending the money to the borrowers. It means bank will lend money to the borrowers. Bank will give loans to the customers. There are n number of loans are there. For example, auto loan is there, personal loan is there, housing loan, educational loan, marriage loan, agriculture loan. There are n number of loans are there, that is called as a lending the money to the borrowers. For lending the money to borrowers, bank will charge interest from the borrowers. Bank will charge interest from the borrowers. That interest rate is depends upon the banks. Nationalized bank, the rate of interest is little bit low, but in the commercial banks, the rate of interest is obviously high. So these are all the general operations of bank. Okay, so in our next slide, we are going to see about the role of investment banking. Investment banking connects capital providers with capital seekers. Investment banking connects the capital providers and capital seekers, facilitating high level financial transactions like IPO, initial public offerings, M&A, means mergers and acquisition, and capital rising for businesses and government. They act as intermediaries, underwriting securities, providing advisory services, and managing complex financial deals. So the investment banking connects the capital providers with capital seekers, facilitating high-level financial transactions like IPO, mergers and acquisition, and capital rising for businesses and government. They act as intermediaries, underwriting securities, providing advisory services, and managing complex financial deals. It means this investment bank will connect the fund seekers and fund providers. So this investment bank is a bridge between the fund seekers and fund providers. This investment bank helps the companies to raise the capital and provides the n number of services like underwriting services, intermediary services, advisory services, etc. So these are all the roles of investment banking. So next we are going to see the Structure of investment banking. Investment banks are typically structured around three core areas. The three core areas are front office, middle office, back office. So the three core area of investment banking is front office, middle office, and back office. First, we see what is mean by front office. The front office client is working for the revenue generation. The front office client is working for the revenue generation, and they are facing the client for the revenue generation, and they are responsible for revenue generating through activities like investment banking, sales, trading, etc. So once again, I repeat the first point, front office. The front office is client facing, directly responsible for revenue generation through the activities like investment banking, sales, trading, etc. And the second area is middle office. So this middle office people are responsible for managing the risk and ensuring compliances. So sometimes the investor will raise a complaints. The complaints related, sometimes the investor will raise a complaints. The complaints is related to about dividend are not paid in time, or they are also rising in some other cases. So this middle office supports the office by managing risk, ensuring compliances, and handling income tax functions. And third one is back office. So the back office provides operational support, including settlements, record maintenance. So the back office team is completely responsible for the entire settlement and record maintenance. They have to maintain the record neatly and perfectly without any errors. So once again, I will repeat the structure of the investment banking. So this investment banking contains three structure. First one is front office, second one is middle office, and third one is back office. So the front office is client facing, directly responsible for revenue generation through activities like investment banking, sales, trading, etc. And middle office. So the middle office supports the front office by managing risk, ensuring compliances, handling income tax related functions. And third one is back office. The back office provides operational support, including settlement, record maintenance, etc. So these three are the important structure of investment banking. So next we'll see the types of investment banking. Next we'll see the types of investment banking. So investment banking have three types. First one is boutique bank, second one is middle market bank, and third one is bulge bracket banks. So first one is boutique bank, second one is middle market banks, and third one is bulge bracket banks. First we see what is mean by boutique bank. So the boutique bank. So this boutique bank are smaller in size. The boutique banks are smaller in size, focus on a specific geographic region. So this boutique bank will do its operation within a geographical region. So they have some restrictions because they are doing only for the small size of companies. So this boutique bank will focus on specific geographical region. And second one is middle market bank. So the middle market bank means these banks are larger than boutique bank. They focus on providing services to mid-sized companies. So boutique bank will do the services for the small type of companies, but middle market banks will do the services to mid-sized companies. And third one is bulge bracket banks. So bulge bracket bank means in the name itself, it mentioned that these are the largest, most globally recognized investment bank. They offer a full range of services, including underwriting, mergers and acquisitions, sales and trading, and research. So once again, I will repeat the different types of bank. The first type of bank is boutique bank. So boutique bank are smaller in size. They focus on a specific geographical region. So they will work within a geographical area. And second one is middle market bank. These banks are larger than boutique banks. They focus on providing services to mid-sized companies. And third one is bulge bracket banks. These are the largest, most globally recognized investment banks. They offer a full range of services, including underwriting, mergers and acquisition, sales and trading research. So these are the three types of investment banking. So next we are going to see the characteristics of investment. So investment has four important characteristics. The first one is return, second one is risk, third one is safety, and fourth one is liquidity. So first we will see what is mean by return. As an investor, we expect higher rate of return for our investment. So it is a general thing. As an individual investor, what we think that we have to get a higher rate of return for our investment. That is a return. And second one is risk. So risk means a situation facing uncertainty or situation involves exposure of danger. Nowadays, investors are don't willing to take any risk. Nowadays, investors are don't willing to take any risk. Investors are expecting a low risk and higher return for their investment. So investors are expecting low risk and higher return for the investment. See, there is another concept in security analysis and portfolio management subject, that is risk return trade off. Risk return trade off. The risk return trade off means high return, high risk, low return, low risk. Or it may called as high risk, high return, low risk, low return. For example, the areas like bank deposit and all, the risk is very low. At the same time, the investor will get only less amount as return. But the places like share market and all, the risk is very high. At the same time, the investor is getting the higher return. That is called as an risk return trade-off concept. And next one is safety. Investors are expecting the safety for their investment. Investors are expecting that their investment will be safe and secure. And last one is liquidity. So liquidity means easily convertible into cash. For example, I am having gold in my hand, so I can easily convert gold into cash. So these 4 points are the important characteristics of investment. So the first characteristics is return. So return means as the investor will expect a higher return for their investment. And second one is risk. Investors are don't willing to take any risk and they are expecting the low risk and higher return. The exact meaning for risk is a situation involving danger or exposure to failure. Safety, expecting that investment will be safe and secure. And last characteristic is liquidity. So liquidity means easily convertible into a cash. So these four are the important characteristics of investment. So in our next slide, we are going to see the key concepts you should know about the investment banking, or it may called as an investment banking key concepts or key concepts of investment banking. So there are five important key concepts are there. So there are five important key concepts are there. So the first one is bonds. In simple term, bond is a type of loan agreement. Bond is a type of loan agreement where an investor lends money to a borrower for a specific period. So in general term, bond is a type of loan agreement where an investor lends money to a borrower for a specific period. And second one is share. Share is a unit of ownership in a company. When you buy shares, you are essentially buying a small piece of that company. Shareholders will get dividend from the company. So dividend means nothing but sharing the profit among the shareholders. So whenever company earns a profit, company will share the profit to the shareholders. And third concept of investment banking is project finance. The term project finance refers to financing long term industrial and infrastructural projects, particularly in sectors like oil and gas, power generation, etc. And fourth point is trade finance. Trade finance is a process of financing commerce that is both domestic and international trade based transactions. And last key concept is IPO. So IPO means initial public offering. When a private company sells shares of itself to the public for the first time, think of it as private company going public and allowing anyone to own a piece of it. So once again, I explain the key concept of investment banking. So investment banking has five key concepts. First one is bond. Second one is shares. Third one is project finance. Fourth one is trade finance. And fifth one is initial public offering. So the term bond means it's a type of loan agreement where an investor lends money to a borrower for a specific period. And second point is share. Share is a unit of ownership in a company. When you buy shares, you are essentially buying a small piece of the company. Shareholders will get dividend from the company. And third one is project finance. Third one is project finance. Project finance refers to financing long-term industrial and infrastructural projects, particularly in sectors like oil and gas, power generations, etc. Fourth one is trade finance. Trade finance is a process of financing commerce that is both domestic and international trade based transactions. And last one is IPO, initial public offering, where a private company sells shares to public for the first time. Think of it as private company going public and allowing anyone to own a piece of it. So these five are the important concepts of investment banking.
Hello, good morning.
Yes, ma'am. Yes, ma'am. Just a minute, madam.
Hi, your PowerPoint is not moved for the slide.
So next we are going to discuss about the fundamental analysis versus
Oh,
technical analysis of investment.
pardon, sir.
Yes, madam.
Yeah, your PowerPoint is not moved for your slide. Still
I'm
in
all-
the first page.
yes, madam. Can you able to visible my slide?
Yes, but it's not moved for the slide.
Yeah, now please check it, ma'am. Is this visible?
Yes, visible, but for the slide is not moved. Still in the first page.
Shall I continue, madam?
Yes, sir.
Ah, okay, madam. So next we are going to discuss about fundamental analysis versus technical analysis of investment. So fundamental analysis predicts the long-term price movement in a share market, but the technical analysis predicts the short-term price movement in a share market. So fundamental analysis predicts a long-term price movement in the share market, and the technical analysis predicts the short-term price movement in the share market. And next one is fundamental analysis will focus on the economy of a country like GDP, national income, inflation, etc. But the technical analysis focus on the internal market data like price of the share increase or decrease like that. Next, this fundamental analysis focus on long-term investors, but this technical analysis will focus on short-term investors. So next we are going to discuss about the mutual funds. Meaning of mutual funds, overview of mutual funds, and mutual fund structure. So first we see what is mean by mutual fund. So a mutual fund or the company, they collect money from different investors and invest in securities, bonds, etc. So mutual funds or the company, they collect money from different investors and invest in securities, bonds, etc. Once they earn a profit, mutual fund company will take that charges and distribute the remaining profit to the investors. So a mutual fund is liking the pooling of investment. So in simple term, mutual fund means pooling of investment from different investors and invest in shares, securities, bonds, etc. Once they earn the profit, they take the mutual fund companies will take the charges and they distribute the remaining profit to the shareholders. An overview of mutual fund. The mutual fund was started in United States in 1890s. So the mutual fund was started in United States in 1890. In India, mutual fund industry began in 1963 by the United Trust of India. So United Trust of India is the first mutual fund company started in India. Subsequently, in the year 1993, the Mutual Fund Regulation Act is passed. After 1996, mutual fund companies have started to grow in the globally. Next one is mutual fund structure. So this mutual fund has two structures. One is open-ended fund and next one is closed-ended fund. So open-ended mutual fund means here an investor can enter and exit as per the convenience. But in closed-ended fund, the investors cannot enter and exit till the terms of scheme ends. So this is a mutual fund structure. And next we are going to see the types of mutual funds. So there are mainly four types of mutual funds are there. So first one is fixed income fund, second one is money market fund, third one is specialty fund, and fourth one is government fund. So first we see what is mean by fixed income funds. The term fixed income fund means mutual fund company will pay a fixed return to their investors. Here, whether mutual fund companies earns profit or loss, they will pay a fixed return to the investors. That is called as an fixed income funds. And second one is money market funds. So the term money market fund means these funds invest in a short-term securities. Here, mutual fund companies will collect the money from the investors and invest that money in a short-term securities like less than 1 year. And next one is specialty fund. So the name itself mentioned that specialty fund means it's a social responsible investing. A fund may invest in companies that supports environmental, human rights, etc. Not invested in a alcohol or tobacco based companies. And next one, last one is government fund. So government fund means mutual fund company will collect the money from the investors and invest that money in a government securities. So these are the four types of mutual fund. The first type is fixed income fund. So the term fixed income fund means mutual funds company will pay a fixed or regular dividend to their investors. Whether they may earn profit or loss, they will pay the regular dividend to the investors. And second one is money market fund. So this money market fund means the fund invests in the short-term securities. Here the mutual fund companies will collect the money from investors and invest that money in a short-term securities that is less than 1 year of time. And third one is specialty fund. The term specialty fund means it's a social responsibility investing. Fund may invest in a companies that supports environmental or human rights and not invested in alcohol, tobacco based companies. And last one is government funds. So government funds, they collect the money from investors and invest that money in a government securities. So some of the advantages of mutual funds are like it is highly liquidity, expert management. So this mutual fund company will have the expert management team will be there. So in every mutual fund company, they will have a expert team will be there. Here the investors will give a money to a mutual fund company. They take care of your money and they know when to invest, where to invest, and how to invest. In mutual fund company, there will be an expert team. That expert team is called as fund managers. So in every mutual fund company, there will be expert team. That expert team is called as a fund managers. Also, there are some tax benefits also available for the mutual fund investors. And some of the drawbacks of mutual fund companies is higher cost, lock-in periods. These are all some of the drawbacks of mutual fund companies. And next, we are going to see the top 10 investment banks in the world. So, JP Morgan holds the first rank globally, followed by Bank of American Securities, Morgan Stanley, Citigroup, HSBC, Hong Kong Shillong Banking Corporation, PNP Paribas, Goldman Sachs, Barclays Investment Bank, UBS Groups, Society General. So these are all the top 10 investment banks in the world. So now if you have any queries, yes, now you can ask your queries.
Is this enough, Chef, for presentation?
Ah, yes, madam.
Oh yeah, we have some question from participant already read in the Zoom chat, sure.
Just a minute, madam. I will check. Please wait, madam. So the question is how the digital transformation and automation redefining the traditional roles and skills required in investment banking today. So the question is what type of skills is required for investment banking today? So a very good question, ma. So the digital transformation and automations are the fundamentally reshaping the landscape of investment banking. So requiring shift in both roles and required skills. So the process of using digital technologies to improve the way bank delivers the financial services. So some of the skills you may require like financial analysis skills, problem solving ability. Should have good idea about mergers, acquisitions, relationship building. These are all the some of the skills required for. And the second question, so the second question, to what extent the rise of fintech and decentralized finance DeFi disrupted the dominance of traditional investment bank. So your question is, to what extent has the rise of fintech and decentralized finance disrupted the dominance of a traditional investment bank? So the rise of fintech and DeFi has significantly disrupted the traditional dominance of investment bank by offering the faster, more accessible, and often cheaper alternatives. While not a complete displacement, fintech and DeFi have carved out of substantial market share are pushing traditional institutions to adopt the innovative. So this is the answer for second question. And Paulina, I think Paulina her name. She has posted the third question. So what's the question? How is the growing emphasis on data analytics and AI, artificial intelligence, impacting risk assessment and decision making in investment banking? See, harnessing artificial intelligence and data analytics for effective risk management, the strategic integration, it's not a strategic investigation, it's a strategic integration of artificial intelligence and data analytics into risk management is not merely advantageous but imperative. It empowers banks to swiftly detect and assess they mitigate risks, ensuring proactive decision making in face of uncertainties. So, any other questions, madam? Tanya, madam, any other questions?
I guess no one else asking again, sure.
Which one, madam?
I guess no one else asking again.
So, I think the students have posted three questions in the chat box. So, I have given the reply for all three, madam. Then
Yeah.
anything else, madam?
No.
Then shall we wind up?
Yeah.
Okay. So once again, I thank the management and organizers of STEKOM University for providing me this wonderful opportunity. And I also thank our MC, Tanya Madam, for organizing this event. Thank you very much, Madam.
Yeah, okay. Thank you so much.
Thank you.
Yeah,
So
thank
thank you,
you.
students. Have a good day.
Yeah, have a nice day and goodbye.
Goodbye. Goodbye. Thank you. Thank you, madam.